The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. How are you? Everybody doing okay? I'm trying to prevent a sneeze. Everyone doing okay? Zig, my trading warrior brother, how are you? Thanks for your consistent, great efforts to promote our webinars on Twitter every day with great sayings, great trading advice. Uh, Wallacear, nice to meet you. Hi, Pete. Nice to meet you. Okay, so yesterday, a couple of turnaround Tuesday candidates worked. They were basically the same one. It was to short the dollar and to buy euro. And it took most of the session, didn't happen till late session, where we got this 1, 2, 3 up here. And then it tried to hold this 97.20 level. It broke down last night. Not unexpected for it to hold here at 97, but I do expect this rally to fail. In fact, when I look at a little longer term chart, I think there's potential if we start taking out 97 for initially 6.5 would be 670 to 6.5 would be next starting point. But I'm going to keep an open mind and think that we could have something like this from here, and we could even really retest this 95.80 level. So we'll see a day at a time. And as I teach, if you were doing up there shorting in the mid 40s, you should at least be booking half of it right now and be in a BE riskless trade. And so the same really situation in Euro. So Euro, look, a lot of these are right at moving averages. It's 1250 level. If this is going to continue, Blake pointed out 1220 yesterday where they could begin to squeeze people. We didn't even take out the stops. I think eventually we will. But, if we get through this level, next level is about 113.10. So this is also giving S&Ps a big lift, NASDAQ a big lift, right? Everything a big lift. Market likes risk on weak dollar. So it could probably make some hay until it turns. Although I would not be chasing S&Ps at the 280, 288 level. And if you look at the NASDAQ here, it's making a lower high. I think you could short the NASDAQ right here and risk 100 points. Um, I wanted to talk about the yen. Although we got over the 61.8 level, we're starting to run out of a little juice. Maybe it's going to try 78.6 here up at 1160. Back under 1120, I think you have something. If we do get risk off, it's very possible the yen could come off too. And then we've reached a lot of objectives that people had a long time ago in the crude oil market. And, it's really flat with the market up strongly and risk on. So it's the first day it's done that. But normally on a day like this with crude, with the S&Ps up 18 handles, crude would be up at least, 80, 90 cents, a buck, something like that. Give me a Y if you're with me. You with me on the dollar, the euro, and now crude? You don't have to agree with the analysis, just so you understand it, because when I'm doing this, I want you to get the whys. Thank you, Pete, because the whys are so important so that you could learn and repeat this stuff without anybody. So, our goal here in FACE is not to make you dependent on us or anybody, but independent of everyone. So anytime you're taking a pattern and play trade from us, you got to read about the whys. Yeah, it's nice if the trade works out and money falls into your account, but it's even important to read the whys of all the rationales and, pick one or two styles. Just like I say, I'm not a big believer in trading 10 different instruments at a time. I think if you narrow your focus, I've mentored some people and it's helped them just to focus on a few markets at a time instead of, you could screen them all, but focus your attention on a few markets at a time. And what you may want to do as a subscriber is focus on a couple of styles that suit your personality, that you have an understanding. You have 4, 5 to select from. Maybe you don't want to trade all the time. And you just want real big position swing trades, and you go with Stelios's macro, right? If you want to be a little bit more active, you get a lot of 1 and 4 hour charts from Grega and Andre and Blake and Steve. So if you haven't subscribed, and I think tomorrow's our 2-year anniversary. So we were going to do something, but there's some personal stuff going on with the team. And it's helped you in any way. Best way to say thank you to us, besides words, and we appreciate words, is to become a subscriber. The link is right here in the webinar. And also want to mention our sponsors, Justin and Trent at Forest Park FX, that can help you generate a little revenue flow for either paying for the subscription. I almost said prescription. And they're a broker of brokers, so they're going to find the best fit for you. And also, even if you have one account, it's an advantage. I know guys that have scalping accounts, swing accounts, spreading accounts, and they have different brokers for different reasons. So you got to call Trent and Justin and at least introduce yourself, say hi, and let them know where you're trading, and ask them about the spreads, and ask about platforms, and do you want an ECN broker? They're pros. They're pros and ethical, which is, kind of a rare combination in this environment of internet propaganda and scam artists and charlatans. So, we work with people that reflect our mission, which is to help all of you. And I just want to say one more thing. A new trader friend of mine said that, he was floundering around. I think I've told you guys already, but he found Blake, I think, on Chat with Traders. That guy, Aaron, I think, interviews some of the best traders. And then he was here from the beginning of ForexAnalytix and said it was a game changer. And you know what? It was, because I've seen him trade. He's excellent. So if you're struggling a little bit, you have to invest. You're going to pay to learn, or you're going to pay the market. Better to pay to learn than to pay Ivy League tuitions to Mr. Market, in my opinion. So with that being said, Blake, how did the shoot go? I saw a couple of shots, and you looked great. And I couldn't help it, bro. I'm looking at you, and I'm going, I wonder when the last time Blake wore a suit in his home office.
Yeah, it
Huh?
just doesn't happen. It just doesn't happen. It's
Did,
funny when
did your sons come in and go, "Where's my dad?"
no, they were fortunately at school, but
Yeah.
the camera crew came to my house, and I was wearing a t-shirt and flip flops, and I'm like, don't worry, I got clothes to change into. Yeah.
It just struck me funny. That's all.
Yeah, it's all good.
I know how we all dress in our home offices. I joke. I love my commute, Blake. And which bathrobe should I wear today?
You should wear the pink one.
No, the Hugh Hefner one with the ascot. How about that?
No, I think the pink one would be great for you.
All right, buddy. Well, that's my name, Pinkert.
Pinkert, there you go. Hey, we got a couple minutes before the ADP. So really quick, I'm gonna let me pull up the charts here really quick. So if you guys didn't hear, we have, well, there's an FT article in overnight, suggesting that China and the U.S. are very close to putting together a deal. There's and that explains the explosion higher in risk appetite equities, yen pairs. You can see like the Aussie yen. We had generally better data out of Australia too with retail sales, but all the yen pairs had spiked up as a result. When that FT article was released, and I knew that was the kind of the risk of the market. I had to pull the euro yen short pattern in play. We had a pattern in play short against this 38% retracement. I took it off before the stops got hit, and then the DAX didn't open in time, so that invalidated the pattern in play. And I took the New Zealand dollar that was short off as a result as well. But again, this is just an FT article that's out, and there's a summit happening this weekend. So there's a good chance that over this weekend, U.S. China might be some sort of trade deal completion, or at least an agreement in principle. So, but there's a couple agreements as far as I think it's enforcement and oh gosh, it just my mind just blanked. But enforcement and some of the tariffs, China wanted all the
intellectual property, Blake.
No, no. I don't think that was some of the big sticking points. Now, there's again, okay. I don't know what has or has not been agreed to, but just some of the major issues that most of the major issues have been tackled, from what I understand. So, okay. So with that being said, you have to be a little bit careful with, trying to trade things that might be risk averse. At least over the course of the next week, I would suggest. Now, let's talk about some of these setups. First of all, we got this euro, quite possibly a double bottom setting up here, and you can see. Let me grab this. Let me remove that. So you have this slightly higher low. Okay, we came out of a descending wedge, and the euros, had a bullish move coming out of the descending wedge. The cable, we were up against this trend line. I actually got limited into a position in the cable at 131.61, and I got out of it just as soon as I got up. I'm like, oh, it's up like 20 pips, and I just took it off. But it wasn't something that I had kind of a stop entry to get long, and I got long, and then I'm like, when I got up, I'm like, I'll wait till to deal with this a little bit later as we see some more Brexit news. I was thinking that maybe it might rally based on some Brexit news overnight. Didn't, but it's stalled. But I think that the risk could be for some continuation. Let's go to the dollar yen really quick, just because we have ADP numbers coming out, and I'll be here for the ADP numbers as I usually am. We are challenging this underside of this. Well, this is a trend line of a channel. So you can see there's the channel top, here's the channel bottom. But the reason why this is significant is you can see the rejection here, rejection here, rejection here. So what that actually means is on a strong number, if we break out, we should go see 112 and above on a good number. And, on a bad number, then obviously we can, turn lower as well. This is, I think, is very pivotal for the dollar yen, and I think you can trade it pretty much as such. I mean, you trade a breakout or a breakdown, depending on how strong or how weak this data is. Now we are looking for 184,000. No, 184,000 was prior, 175,000, and I hear Stelios.
Hi, yes, the calendar I have is showing 184 expected, but it doesn't matter.
But yeah, I thought it was 184, but I see Bloomberg has 175. So that's what their survey is right now, and that might have been some near-term adjustments based on some data that has been released. Okay, so that is weak 129,000. So we are seeing a little bit of weakness in the dollar yen, but not a lot. you look around and you go, well, would you expect the euro to just be a lot higher here, or the cable to be a lot higher? Kiwi didn't move, the Aussie needle didn't move, the dollar yen, I mean, we spiked down and came right back up again. Not a lot of reaction, and that I have to say, honestly, I'm a little surprised that we haven't seen more of a reaction in the data. I didn't short the dollar yen, not yet anyway. That doesn't mean that I'm not considering it at this moment, but
maybe the market's waiting for payrolls on Friday. I mean, ADP tends to be a little bit more volatile as a number, but yeah.
Yeah. I mean, you maybe, I guess, but like look at the dollar Canadian, that's actually going higher now, which is good because I actually picked up some dollar Canadian this morning on a possible double.
Oh, I see a revision higher as well. Maybe that's why.
Yes, actually the revision just came in at 197,000. You're correct. Was that wasn't out just a moment ago? So, yeah, I mean, you know what I'm going to do really quick? I am going to take my dollar Canadian off. There we go. I just took that profit there. Just, trying to shore up some positions here. Yeah, I'm surprised that the data, that it must have been, I mean, this revision that's really prohibiting the dollar from getting too squirrely at this point. Stocks did not have much of a response. You can see the equity markets came down just a hair, and this is a 5-minute chart too, so not a big response there.
Blake, sorry to interrupt. I think you were talking about the US and China before. I think that this trade deal, when it happens, is probably going to be one of the ultimate buy the rumor, sell the fact cases, because equities have been rallying on the back of this potential deal for weeks now, and it just feels like as soon as it's announced, we're just going to drop.
Yeah, my inclination has always been, and I'm gonna let me give you guys my thoughts here, and let me remove this blue arrow so I don't taint your thinking right now. On a trade announcement, I have been longing to short the Aussie dollar, and conventional wisdom would tell you, hey, the Aussie dollar should be a really, on a trade deal, because the Aussie's been pounded. It should be a really good long candidate, which I actually think that I'm going to elongate the time here. The first couple of days, it might, Aussie dollar might actually rip towards, 73 cents, let's just say. But I will use that as an opportunity to sell the Aussie, because my 2 cents about a trade deal getting done is that once a trade deal gets done, it is ultimately going to be better for the U.S. and worse off for China. You reverse us a year ago, where are we going to be versus China, from a year ago to where we're currently at post trade deal? It's taking business away. It's China. It's redirecting China business to the U.S. away from Australia, away from New Zealand, away from Europe, away from everywhere else. And Australia, I believe, is going to be ultimately between Australia and New Zealand. And just keep in mind, I actually think the Aussie New Zealand, and I am long, is a great long. And just so you guys know, I talked about this on the Real Vision that's going to be published tomorrow. Just giving you guys some fair warning about the reversal here in the Aussie New Zealand. But and I'm already long, and I'm looking to add aggressively, actually. So, but I do think that an announcement, Stelios, will push up the Aussie dollar. It will probably push up Kiwi dollar, right? And then I'm going to look to fade the heck out of both of those on an announcement. That's my plan. So that goes in line with what you're saying. And this is the whole timing aspect of it. Stelios is, I believe it is buy the rumor, sell the news. I don't know if it's going to be buy the rumor, sell the news that day.
Yeah, you know what? You're probably right, because the market does make knee-jerk reactions, right? So, and I do agree with you. You know, when you say that, a trade deal is probably going to be positive for the U.S., more positive for the U.S. than China, and we all know how correlated Australia and China is. I mean, if you're trading Australia, you're effectively trading China, and it is.
Sure.
I agree with you 100%. The thing to note, just something that came to my mind now, is that we're actually seeing data coming out of China, which is stronger than expected. Now, Steve talked about this yesterday, and he said, how much do we believe the data? Well, assuming that it's real and we do believe it, it's coming out stronger. Like PMIs today, service PMI, really, really a lot stronger than expected out of China. Just something to keep in the back of our minds.
How
So,
about guys?
go ahead.
I'm sorry. ECB tomorrow morning. Still, you have any fundamental expectations for what Draghi may say tomorrow?
Well, the situation in Europe is, let's put it this way, it's not improving, is it?
But wait, let me just preface what Dale asked. Tomorrow is the ECB meeting minutes, which
Minutes. Oh, okay, it's not a meeting.
No. It's the minutes. And by the way, and I know I mentioned this during the week ahead video. The meeting minutes have been increasingly
important,
more important over the last, I would say, over the last year. Stelios, you got to correct me if I'm wrong. I believe they only started publishing the meeting minutes over the last like year and a half or 2 years. So
correct, yes.
Yeah. I think it was a very late addition to the market, but more importantly, the market. It gets the market's attention. Anyway, go ahead with what you were going to say about the ECB.
Yeah, what I was going to say is that what's been coming out of the Eurozone has not been improving, right? I mean, data has been pretty mediocre. Okay, today's PMIs were better than expected, but overall Germany has not been doing well. That's a fact. And you have issues like Italy and what's happening in France, which is a little bit underreported by the mainstream media. But anyway, it's the Eurozone, and also the possibility of the UK exiting maybe on a no deal. These are not good things. So I find it very hard, especially on a global environment where things are turning lower. I find it very hard for the ECB to be anything but dovish, and for most central banks actually at the moment, with very few exceptions.
Yeah, hey guys, just one more thing, guys. I sent Jim's stuff to you yesterday, and I know it's real, wordy, but I talked to him yesterday, and he was talking about like term premium and bonds, and the expectation.
Explain to the people at home listening, Jim who? And I know who you're talking about. But
Jim Welsh.
Jim Welsh, who you do bring on as an interview,
right.
Not enough in my opinion, because the guy's one of those guys that when I share his thoughts, like if I'm talking to my office in Greenwich.
Oh yeah.
And I'm talking to those guys, and I'm like, yeah, this guy Jim, blah blah, and even the guys are in my office are like, oh man, that guy, he really gets it. His ideas are good. But anyway, go ahead. Sorry.
Anyway, so I was talking to him yesterday, and he was talking about the whole move in bonds down. It's all about I think it's called the terms, and you get premiums and discounts. And his take is that the bar is so low. And there might be one more dip in yields, but the bar is so low that the economic surprise indexes are going to, just like individual companies lowball their forward guidance so that they beat it, that it's going to, he's actually looking for that to happen, and yields, once they bottom here, to do almost exactly or even more what they did a year ago. So, there is potential there for, maybe Draghi to not sound as gloomy and pessimistic as he has been. Anyway, it's a very important, I called him. I said, Jim, can you just give me the bottom line on bonds, what you're thinking here? And he said, Dale, you have to read this thing, because he said when he writes, he learned something new. Okay, so a pretty important thing for anyone who's interested in interest rates and the economy to check out.
And Jim Welsh is, like I said, he's really a great person that you interview. I listen to his analysis and his way of thinking, and one of you're talking, 40 years of market experience from that gentleman. He's he's a wealth of knowledge. So anytime he's on, I think it's great because he doesn't have a huge social media presence either. No. So to get him on our interviews is just it's truly a pleasure.
I'm going to get him back on, but I'm just saying that when I talk to him, he never says that to me, Dale. You have to read this one part because it's something I learned too that accounted for both 3 1/4 10-year yields and what's happening now compared to what happened a few years ago, same type of setup. So just want to let you know.
Awesome. All right, Coach, thank you. So let me run through some of these majors. And by the way, Steve is dealing with some personal issues right now with some family issues. So I'm going to be here for the next 30 minutes with Stelios and Coach. But I'd really like to. Yeah.
Greg is also going to join us in about 15, 20 minutes.
Oh, okay. Yeah. Oh, great. Okay, so let me cruise through some of these majors really quick and just give you some of the key levels that I'm queuing off of today. So let's start with the euro dollar. So again, I want to talk that we've come out of this descending wedge, which if you didn't look at the dollar index and the candlestick yesterday, then shame on you, because this is what you call a gravestone doji. Okay, gravestone doji, especially after a prolonged rally, is a bearish reversal, and it's it actually ended up closing like a shooting star. But regardless, it was a bearish reversal candle, and if you look at like the analysis on the dollar index, the candlestick, dollar index posted gravestone doji, which is a bearish sign, and you can see it's obviously playing through today. And that when I saw that, I was thinking, okay, well, with the euro, we have this descending wedge, possible double bottom. That's one of the things that provoked me to say, I don't want my Kiwi short anymore earlier. All right, so we've seen a reversal in the euro. Now the question is, how far are we going to go coming out of a descending wedge? And minimum targets 38% retracement, which would be up here at 112.81. Are we going to get there right now, or can we do this today? It's to be seen. Maybe we develop a little inverted head and shoulder pattern, and then eventually make our way up there. I don't think looking at it right now, I don't know if you necessarily want to just start piling in long the euro. You might be able to see a little bit of a dip here, especially if we have a little bit of risk aversion. S&Ps are coming off their highs. Not saying that the market's going in a complete, reversal here, but we are seeing a little bit of a reversal in the stock market. So that could give the dollar a lift. I think that if you get dips to like 112.20 in the euro, you probably want to use that as an opportunity to be on the long side. That's the way I would view this today. Not saying that I won't get long the euro right now if it just started breaking out. I'm just saying that I'd rather play a dip if possible. The cable, like I said, I had a stop order to buy the pound at 131.61 overnight. It triggered on the spike up while I was sleeping. When I got up, we were in the 80s. I just took it off. It was, it was a 20 pip gain. It wasn't anything that I was going to write home about. And it was a relatively small position. So I didn't even tell anybody. You guys are the first people I'm telling, but I just got out of it because I thought that if it did rally past this resistance, it was going to be because of some sort of breakthrough in Brexit. It wasn't. It just kind of squeezed. So therefore, when I got up, I said, all right, I'll just take it off and I'll revisit it, now that the market's open. I think this is a pretty pivotal area in the cable, this support zone, you can call it. What I'll say here is, as long as we're above this, you can play it to the long side. Got to be a little careful with this downsloping trend line at 132.25. But if we get back below like 131, 30, then you're the risk of a move back down here is pretty high. And I'm not married to the cable directionally right now, because obviously all the Brexit, ongoing shenanigans. It's not worth my time getting too directional here. Aussie. So the Aussie, I originally had this. Let me take this line. I originally had it drawn like this, this triangle, but I actually think this might be actually more symmetrical, and you can see that this is obviously pretty key support in the Aussie. So we're at the upper end of this triangle right now, which means that if we break higher, we could break towards 71.50. Now, obviously, if the Aussie breaks this downsloping trend line here, it's going to be pretty aggressive, and this would be on our as a result of some good China news, some favorable Chinese news, whatever. But I think you got to watch the Aussie, because we did make a ever so slight false breakdown yesterday, and then obviously the strong data pushed us back up again. And I'm going to tell you guys right now, I'm long the Aussie New Zealand, but I would not be short the Aussie, because any breakthrough in trade, and the thing is we're going to see probably a pretty big move here. So hold on one second. Okay. All right. So anyway, there's the Aussie. So let's take a look at the Kiwi. The Kiwi, we're right up against the 618. I am short a little bit of New Zealand dollar, not just the Aussie New Zealand. I actually shorted the New Zealand dollar right around here just because of the 618. But frankly, this thing could continue to squeeze higher. We did have a little false breakdown below this trend line here. Okay. Which, false breakdowns usually lead to breakouts the other direction. I'm trying to play it on the short side, but I'm not going to stick around long. Let's just put it that way. I'll be, one of the first to cover, and I don't know if I'd necessarily go long the Kiwi. I'm not a Kiwi bull, especially not after what happened with the RBNZ last week. But that doesn't mean that the Kiwi can't squeeze, and it is possible. I think we get above the 68 cent level, we might squeeze back up towards the 68.50, 68.40. Dollar Canadian, a little bit of a double bottom here. I already got out of my dollar Canadian long. I bought it at 133.02 and I sold it at 17. Just kind of playing this. I don't want to get too aggressively long here without crude oil rolling over, and crude oil is still green on the day. So if crude starts hitting new lows on the day, that might entice me to get long the dollar Canadian. I'd have to see crude rolling over, stocks rolling over, and that seems to be asking quite a bit in this market. The dollar peso, actually, I have to admit, the dollar peso has held up well. You can see I have an alarm set at the 618. This has been here since yesterday. Oops. It's been here since yesterday, because frankly, what I was hoping for, which hasn't happened, but what I was hoping for is a move down here to the 618. Then I was going to get long, off of this support here. So I was, waiting for this to get triggered, this alarm, so I can, be notified when it gets down there. It's not doing it. And the fact of the matter is, it's holding up really well, despite the risk on nature of this market, which in turn you should be taking into consideration. With stocks so strong, emerging market currency is not strengthening. If this market ever turns lower, like let's say, we get some news that, the meeting between China and the U.S. is starting to, like there's still a lot of sticking points, blah, blah, blah. Stocks turn lower. This dollar max is going to rip. So I'm not long at the moment. I've been playing it to the long side. I'm just, I'm just observing how strong it is, despite the weakness in equities. And that's,
Blake, I don't think the market is, if yields start to go up, because everyone's saying, we've moved to where everyone's expecting a cut sometime this year.
Yeah.
That stocks are not priced for higher yields should that occur. I think that might be the catalyst for a correction.
Yeah, with yields going up, if yields continue to go higher, and let's go over to the bond market really quick. As I think a great observation, Dale. Money's fickle. Money's like, okay, at what point when yields continue to go up, and that this would be, if yields go higher, that and just so you guys know, this is the bond market, the 10-year. Yeah. We rejected the 618, 161% extension of this last range. We've been noting in ForexAnalytix a drop below 123. The 10-year is going to be a bearish event, which means bonds down, yields up. If yields rally, at some point, people are going to start to go, you know what? I'm a little nervous with stocks where they're currently trading. Valuations seem a little high. I might take advantage of the higher yield in the safety of in the bond market, and just look to put my money in bonds and take advantage of the higher yield play there. So yeah, you're right. I think if yields continue to rise, you might see money go from one basket to another, and that's entirely possible.
I think there's one more pop to new highs, but a lot of Elliottians, and this is not a lot of my stuff is not original thinking. Okay, I talk to a lot of people. I do intelligence together, and I think a lot of people are calling this a 4 on a pullback.
Stop real quick. Just really quick before you go into that what you say as far as intelligence gathering. Look, I'm that's one of the benefits of I'm gonna plug the chat room, and the reason why I'm gonna do this is because there are about 100 people in here right now, 106 showing 106 are in there right now. So we have a lot of really talented people in here, and I gather probably half of my ideas from the people in here. Like the traders in here, they'll say, hey, euro dollar is hitting this, trend line. And I wasn't looking at the euro because I was focused on the Aussie, New Zealand, and I'll look at the euro and go, wow, that's a good trend line. And then I'll post a chart on ForexAnalytix. So ForexAnalytix subscribers, even if you're not in this chat room, you get notified that, hey, the euro's pushing up against this trend line and the relative strength is divergent or whatever. So these, the nittish
social trading, buddy.
It is, but but that's also the benefit of. Sorry, guys, I want to take it off now. Taking them off Jumbotron for a moment. But that's the thing about the webinars that we do here. You bring on so many great people and so many great interviews. And you don't have to. I'm a big believer that you got to find your own way in the market. You don't, following one person or persons blindly. What do I do? Do I buy or sell? And blah blah blah. When are they doing it? I'm just going to do what they do. You're never going to learn anything that way. But getting information from several different sources and formulating your own ideas based on what you're hearing, I think is great. And you have one of the best jobs for that, Dale, is you get to interview so many people and hear so many different voices, not just our team. I'm talking about all of your interviews that you do every single day that, everybody listening here should be listening to as well. You get a lot of great, when you say, well, that wasn't an original idea, I just do a lot of intelligence gathering. That's smart. That's what all market participants should be doing. So anyway, okay, I didn't mean to
Yeah, it's
take
okay.
away from your.
In the old days, they would do that at big brokerage houses. They'd bring in the whole team,
Yeah.
and they would all discuss their ideas.
We did that every morning. We do that every morning actually with our office, but
Right.
but in
We did that every morning at the bank as well.
Yeah,
Yeah.
like a squawk box, right, Stel? You'd have a squawk
Yeah,
box.
yeah.
Yeah, you gather for 15 minutes and you just say, "Hey, what's your best idea today?" And everybody's hearing them, and then you can just take with it what you will. And but anyway, go ahead. Sorry. So you were talking about a possibly new high in the market.
Oh yeah,
which
maybe
you're
yeah.
talking about the S&P,
And
I'm
Greg is going to be here. Maybe one more push up in the bonds, one more dip in yields, and then that may be it. So we're close.
Hello, guys.
Hey,
well,
Greg is here.
Yeah,
Hey,
yeah.
Hello.
hey, what's up, Grega?
Wizard.
fine.
Here.
How
Hey.
was yesterday?
What's that?
How was yesterday, the interview? The interview yesterday.
Yeah.
With you?
No, with Blake.
Oh, he's
that
asking you, buddy.
that one. As I was telling everybody a little earlier, so just so you guys know, I basically am building the case for a long Aussie New Zealand,
Yeah.
big reversal, China deal, shift in central banks. Our RBA is still dovish as the market expect, but the RBNZ is, obviously is tilted towards dovish, which, this shift in interest rate, expectations is, tilted the Aussie back toward, towards a stronger Aussie. Anyway, when it's all said and done, because it just blurred by, the 10 or 12 minutes, I'm like, man, did I say that? Did I forget to say that? I think I forgot to make this point, and I know there's a lot of points that I forgot. So, good news is that you guys have me here, and I can comb through all of my ideas and make sure I tag every point.
We're our own worst critics, man.
But also one of the other difficult things, and I was trying to explain to some people, is there is no host, so it's just me, and I like having a host because hosts are, especially if they're good, like Dale, you're thought provoking. So you're like, well, Blake, what would you do in this situation based on what you just said? And I'm like, oh yeah, that's a good point. I would do this, that, and the other thing, and I definitely wouldn't do that. And having a host is always easier, because if you have a good host, because they can play off of what you're saying and push you, or try to get you tilted in certain directions and point you in certain directions. They help guide you from an interview standpoint. So when you're doing it by yourself, when it was all over, he's like, so was that it? I'm like, I think so. I have to listen to the end result and see if I said everything that I wanted to say, but I know I didn't. I know, thinking about it, I'm like, shoot, I forgot to say this and that. And I had some statistical data on New Zealand and how, the China and their exports, and I forgot to mention all that. And well, what do you do? What do you do?
The show must go on.
Show must go on.
Episode 2.
Yeah, maybe we'll have another one. Joe really had to beg for me to come on here, and I did it for the team, and I did it for Joe. I don't know how often I'll do that. I'm not a big fan. I like doing these webinars because I can talk freely with you guys and gals. But
how about a quick announcement about Joe's new webinar?
Oh yeah, well, Joe has a new webinar, which is going to be the London Close. It's going to be on Wednesdays, which I think starts the 12th, right? Today is the 3rd.
Yeah.
Is it the 12th?
I don't know. I have
to go back.
I have a lot of.
I think it's the 10th, isn't it? Wednesday the 10th.
Yeah, it's a week from today.
Week from today. So a week from today it'll start, and it'll be
what
good.
Time?
You're asking a guy that's time zone illiterate, so it would be
London,
probably
1 p.m.
It's going to be 1 p.m. Eastern, 6 o'clock daytime.
There we go. So it's a nice midday for us in the North American trading time zone. It's like a midday update, if you will. But if you're in London, it's at the end of the day. So
you're at the pub watching
stuff.
Joe.
Yeah, right. All right. Well, hey, Grega, thanks for being here today. Always great having your views, and appreciate you being here with Steve's absence. So, can you show me? I didn't ask you in advance, and I'm going to ask you right now. Is it possible you can tell us a little bit about the stock market, because the stock market is now above the 88% retracement, and frankly, it looks like we're going to new highs. I mean, what say you?
Yeah, sure. Will you give me? Okay.
Yeah, I'm passing it over to you right now. So, I mean, the stock market has been unbelievably strong. It looks like we're, anticipating some sort of deal with China, and stocks just look strong. So, yeah, what do you got here? Ooh.
Yeah, I mean, as they will know, I mean, we were warning about this dip that we have seen at the end of last year as a corrective movement. We were still at this above this very important lower trend line support connected from 2009 lows on the S&P 500. So I was seeing this as the only temporary pullback, and the reason was very simple, because I have probably better chances to be right if I will label each pullback as a movement rather than a top in place. So saying said that, I mean, we have seen a very nice reversal higher, clearly after only 3 waves of decline here. So definitely I'm looking to new all-time highs. I was expecting a deeper correction, something more complex, but it appears that we will just continue straight to the upside, and maybe no one will get any good chance to get involved here in this bull trend at lower, better prices. So I think that maybe a pullback will occur, a deeper one, but after we will see a push to new highs. Also, I'm looking at the 10-year US notes here, or firstly yields, if you want me to cover this. I mean, there was a very nice reversal to the upside. We also talked about this overlay chart in our webinar a few weeks back. So what I was highlighting back then is that the S&P 500 was constantly bullish since December lows, and I saw a potential bottom formation, or at least I saw the 10-year US notes moving into resistance. So if the yields will really move to the upside when notes will coming down, then obviously the S&P 500 could just accelerate to the upside, because it was already trading higher on itself. Okay, so with the help of the 10-year US yields, it was just another acceleration to the upside. So I think, since we are seeing only first leg here from the lows, but we know that any reversal in the markets from the Elliott wave perspective should be made by minimum 3 waves, then I clearly expect that this S&P 500 will resume to new all-time highs, because, as I said, this is, let's say, wave A, wave B, expect wave C to the upside. So which means more gains here can mean more gains for the S&P 500. And also, based on a near-term or short-term trading perspective, what I would love to see is potential fill of this gap that occurred on Sunday. So we also talked about this yesterday. Still, we haven't seen any reversal lower, so I'll just patiently wait if this pullback will occur. In such case, there can be a chance to get in on some yen crosses. So I really like how CAD yen is trading at the moment. We are seeing some very nice structure to the upside. Looks like an impulse in progress, so still waiting on this wave 4 to show up, and then maybe we catch the upside for a wave 5. There, if we have any questions about any yen crosses, I can cover them.
Hi, how are you, Grega?
Hey, how are you? I'm fine, thanks.
Okay. So, yeah, I just stepped away for a second. Yeah, you were looking for a pullback in Aussie yen to get long. It looks like we're heading up. Okay. So there's still the potential of a pullback here.
Yes, I mean, we are at this very important swing highs here at the upside of this range. So let's assume that this gap, Sunday gap, will be filled. Then maybe we will still get this deeper pullback in wave E here. Or if not, if this market will just continue straight up, then obviously wave E was very small and finished already at this swing low. So for now, I still have to be very patient, and definitely from a trading perspective, I would rather see a deeper pullback than going in here at the upper side of the trading range.
Can I ask you about yields here, Grega? I know we covered it. Do you consider this recent pullback that we're getting in bonds like a 4 and there's one more low, or you're looking for, it looks like you're looking for a higher low? Some guys are calling it a 4. You already have it complete at 5.
Yes, I'm looking at a
Okay.
Yes,
Okay.
because I mean, it can be a wave 4, but since it's a very sharp decline, I still think this is only first leg, so much lower prices will be seen probably. In such case, you would likely see also a broken trend line. And if that happens, if you see a broken trend line connected from waves 2 and waves 4, then you may assume that we are in a higher degree corrective pullback rather than a lower degree that would expect to send prices even higher within wave 5. So with that being said, I assume that we are already here in a higher degree cycle.
Okay.
Okay.
You know, the dollar, everyone's saying right here, Grega, that a breakout in the dollar over 97.80 is a layup. You know, I put out a tweet and someone said even Charlie Brown knows we're going to break out over 97.80. Do you see the potential that the Dixie might be, you know, surprising people with maybe one more shot down before that happens?
I mean, since we are consolidating, let's assume that this was a triangle, maybe already finished. Well, then move to the upside. The new high should unfold in 5 waves, and looks like deep can be a wave 4.
Okay.
It's not sharp, so not really sure that it's completed. But also, if you take a look at the euro dollar, okay, it can also be wave 4 here, still unfolding. And if you recall, yesterday we said that this can be a very nice resistance area, the former area of wave 4 of 1 lesser degree. And since it's only first leg up, I mean, it's a resistance, but can be only temporary setback for small wave B, then a retest of 38.2%, and then a new low. So,
okay,
yes,
would that change if we got above the high that we're having right now after a pullback? If we, your count that we're, I just saw one count that would almost allow for, on the daily, for it to, the euro to even challenge at 114 level again before it goes to, you know, lower levels. Some type of irregular.
Irregular flat, you mean?
Yeah, that's probably what it is.
Well, yeah, I mean, for now, I will stick with this count. But if we are starting to building gains here above this March 25th levels, then probably I would adjust the fuse. But again, in such case, if we trade at 1.13, then we would be back in this very messy price action, big range, below the range actually. So there will be, again, a lot of different interpretations available, even triangles here for a wave 4 or maybe even wave B. So I mean, it's still euro dollar no man's land. We are going nowhere actually here with any clear breakouts yet. So,
okay, so you know, Grega, of course there are lots of Elliott Wave practitioners, and you know, I ask this to other people because you know I've been able to witness your work for over 2 years now. So you know, I have confidence in your counts and your alternates and where things are invalidated. What would you say? And I know you probably look at other people that practice Elliott Wave. What distinguishes your work from other Elliotticians? What would you say?
because I'm very flexible. It's not about the analysis, okay, but it's about how you approach to the analysis with your trading setup. Okay, so I can have multiple wave counts, but the key is that from those multiple wave counts, you find the probability rather than possibility. And and when you will discover the clear wave patterns, then you can start with your trading, building or working on your trading approach and potential trade setups.
Okay, so even though you have a preferred count, you would say your flexibility to go to the alternate, where some people will be stubborn with their preferred, and
I'm not making the wave counts to to predict where the market will go in the next few months, but I'm making the wave counts to find my trading setup.
Which is different.
Yes, of course it's different because I can be wrong on the long term, but on the short term, it's still current wave count can still produce a very nice trading setup for the next few weeks. But on the long run, I mean, and on the long, yes, I can be wrong with the wave count, but still it can be a very nice trading setup. So it's all about the trading. It's not analysis. As I said several times,
Right.
I make, I don't know, 100 charts per week, maybe even more, but maybe I will not find any interesting trading setup and I will not trade at all. So it's about tracking the markets, and once you are confident with what you see, then you're ready to pull the trigger. I know that there are followers who will say, you are wrong here, you are wrong here. Yes, okay, I was wrong, but I was tracking it, but never pulled the trigger. That's the different story. So it is what to trade and what not to trade.
Okay, you know what I've noticed is
I was just going to say that's so important for people to understand. So important for people to understand that.
Yeah. So, Greg, what I've noticed with you is your highest conviction trades are when you have maybe a primary count, and then you have another count that long term might be different, but short term, one might be bearish, and another one might be saying bullish, but predicting a short-term correction, and you don't know which way it's going to go. But when they're both pointing in a trade direction, those seem to be your highest conviction trades. Am I correct in reading that?
Yes, exactly. And that's what it's all about. It's not about only analysis, but as I said, it's how you trying to apply analysis into your trading. So the good example was here on gold, as we discussed several times on this gold. So clearly, that's definitely a very good case for to learn from different approaches to find a very good trading setup.
Yeah, because they're both pointing in the same direction. Long term, you don't know which is going to end up manifesting, but short term, they're both saying the same thing.
Yes, exactly. So,
all right, that's beautiful.
We're looking down. Short term, long term here we were looking down for a wave C.
Yeah.
Or we are still making this higher wave B before we see a very big drop into wave C below 1,000. But on the short term,
either way, they were both good for $50.
Yes, exactly.
Okay, buddy. I tell you, man, you guys need to be able to see Grega's work every day, and the best way to do it is to subscribe with us or subscribe with Grega. Anyway,
can I mention something too? You know, when we're talking about trades, this is really one of those markets, and I know Grega will agree with me on this, and this is one of the beauties of Elliott wave analysis. This is not a momentum market, obviously. We have very low volatility. Momentum doesn't really pick up in any general direction, especially with any of the majors or any of the majors in the FX market. This is a market where you have to let the market actually come to you and be very selective in your trade, just very, very, very good in your trade selection. And one of the things about Elliott waves that I really appreciate is the fact that it's really setups that allow the market to come back to you to resume an overall trend or theme that you're playing into. So, and that's what, going back to what Grega was saying is, he'll look at 100 different charts and not even see anything that's worth taking a trade. He may post some charts, but it doesn't mean he's pulling the trigger. And that's, I'm like Grega, and I know a lot of us are. We look at so many different charts, but it's important to let the trade actually come to you and play into what your overall idea is. So anyway, I just wanted to mention that.
Well, thank you, Blake. I'm not sure Lydia's here yet, Grega. So if you have time for one more, Mohamed is asking about the guppy. And Lydia, if you're here, can you send me a question? Go ahead, buddy, if you have time for the guppy. Or kiwi, pound yen or pound kiwi. Yeah, it's unusual. Lydia's usually early.
Right.
Okay, so pound yen, I mean, it looks like it made 5 waves of decline, and we rallied in 3 waves so far. We stopped at 61.8% at the moment. So I'm just wondering if we'll see a sell-off here for wave C before market moves to the upside. And actually, this wave C could again come in play if stocks will come a little bit lower and trying to fill that gap as we discussed earlier. On pound kiwi, this one is quite interesting, and that's probably the wave structure, which I call it, that has a clarity. This is very important when it comes to Elliott wave, as repeated so many times. Track and pay attention to clear patterns, and this is very clear. Strong drop and very slow overlapping with core. So I mean, this should be a correction if this was an impulse. So corrections are choppy, slow, and you will see plenty of moves in both directions, while impulses are fast. So if you are able to recognize those two, then you know in which direction market should continue when correction is completed. Obviously, in the same direction, like we have seen the previous impulse.
Right.
So this one is very clear. I mean, we probably will retest those previous swing highs once more, around 61.8%, and then we would be watching for our reversal.
Yeah, we could get a wave 3. It's a money wave. Do you kind of look at wave 3s as being your preferred trades to look for? Because they can be fib extensions of a prior wave.
I really like wave 3, but it's very hard to stay involved in wave 3 and catch the whole move if you are tracking markets on a daily basis, because you know that within wave 3 there will be pullbacks, and sometimes fourth wave pullbacks within wave 3 can also be deep. So in such case, it's not very easy to survive the whole ride within wave 3. So I rather build my trades on the minimum expectations, which means I would focus rather than in wave C. So even in wave C rather than wave 3. So even if this can be a wave 3 to the downside, which means it's are, as you know, much lower compared to the wave C, I still will assume, okay, maybe this will be only wave C to the downside. So in such case, I should make the proper risk reward scenario, because if suddenly this would become wave 3, then of course a reward would be even better.
What a great, you know what, you're a natural teacher too, Greg, besides being a very good trader, excellent analyst. If I can understand things, then most people can. So I really appreciate, you can't teach an old dog new tricks, and we all know how old I am.
Yeah, I just talked with some members earlier. I said that I have son with, he is 6 years old, and he comes into my office, and I showed him charts, and he's looking, what are these? And I said, look, here's sugar and here's cocoa. If sugar goes down and cocoa goes down, we can buy a lot of chocolate. If cocoa and sugar goes up, we cannot. So for him, these are like steps. So the first approach into the markets with Elliott waves.
So I assume your son is hoping for a bear market in both.
Yeah.
Am I right, buddy? Huh?
Yeah.
and then after you give him chocolate, I'm thinking you're hoping and sugar that you're hoping for a bull market in both.
Yeah.
After he gets real hyper on the chocolate.
Honestly, he would eat everything. I mean, his sister would probably.
Thank you so much, my trading warrior brother. I'm not sure. It's very unusual. I've interviewed Lydia, I don't know, 20 times over the years, and she's not here.
That's kind of rare.
So I could try and raise her on Twitter. She's probably busy, but if you want to, what?
If you check the email or on Twitter, maybe she contacted you.
Yeah, I'm looking for her. Anyway, it's unusual. It's up to you, Blake. What's your call?
Well, I mean, if she's not here, she's not here. It's just she's usually here, which is weird. She's one of those.
I'm gonna send her a tweet.
Okay, I can take a look in the meantime. I can take a look at Aussie against New Zealand.
Okay.
Yeah, please do. That'd be great.
Thank you,
yes.
Greg.
And also, we talked with Dale this. We covered this one, I think it was last week. He asked me because he had his own interest in this pair, what I'm thinking about it. And actually, it was a very nice deep free wave decline right into the 61.8%. There was a wedge called an ending diagonal in Elliott wave terms. And also, free wave decline was completed on there. And since we are turning very nicely to the upside, I think that actually this is a 5-wave recovery. I think that more upside will be seen. And personally, I'm also interested to buy this one, but after a pullback. So let's assume that we are now in a wave 5 here. Okay, just let me. So
a lot of big moving averages at 107 at your C target up there. And I think it's close to some type of fib or trace of the decline.
So you're looking for a push above to new highs of the year. Yeah, of course.
Yeah.
I mean, maybe that's a very small wedge ending diagonal here.
Yeah.
So watch out for another push higher, and then I hope that we get a pullback. So this is analysis, okay? And sometimes I receive questions, whatever, or critics that, Gregor, you were wrong. Market did not move to the downside from that level, okay? And I say, okay, this is the analysis I'm talking about. This is the analysis with my trading approach. So it means if I will see this pullback, it would be good because I would be looking for potential longs. But if we don't get this pullback, I'm fine. I have no problems with that because I definitely will not short it, this market at the highs, because we are changing the direction into a higher degree bullish cycle. So that's very important.
Can I say something, Greg? Because I know you go through it and a lot of guys in the business go through it. There are just some people out there, Greg, that hope others are wrong to justify and rationalize their own failures. And you just have to move on and realize that that's really it and hope they do better. But, no one can call every jiggle, every move in the market. And good traders, like great surfers, I put out this tweet. Great surfers do not try and catch every wave. They too wait for good setups.
Yeah, exactly. Very good point.
Yeah. So, and I've noticed you do it. The whole team does it. So, any detractors, Greg, I'd let it just roll off your shoulders. You're a pro, and everyone I work with, and I think today's our anniversary, 2-year happy anniversary, Greg. 2 years on Face. It's been great working with you. Huh?
Face. It's 2 years of Face, not of
Face. Face. Yeah. Yeah, Face. You were here. I
Greg
think a year before that.
Very beginning, yes. The very
What was it? An extra year before we started Face, Blake?
I think it was about a year. Yeah, maybe about 9 months or a year or something like that. Yeah.
Yeah, because I know I was chasing you for a long time. Hire me. So I know that you guys were in beta and then everything else. And I want to thank you guys for bringing me on board. It's been one of my best FX experiences in my career. And really, thank you. People say, well, Dale, you're bullish on the team because you're part of the team. But I'm bullish on the team because I've seen the team in action for 2 years, and I've interviewed thousands of people. And in my subjective opinion, it's the best team ever assembled in the FX world, at least in this era. So thank you, guys. I don't think Lydia's going to be here today, so we'll wrap it. And thank you, Grega, again for hanging out with us, and Blake, thank you for hiring me.
Thank you, guys. And Greg, I really appreciate you being here. And Coach, the Face webinar would not be the Face webinar without you.
Okay, well, and thank God the Face webinar doesn't show my face anymore. So anyway, I use old pictures on Twitter now, Blake. So anyway, everyone, remember, don't just count your pips, count your blessings. If you appreciate what we've done here for a couple of years, today's a great day to celebrate it by becoming a subscriber. And with that being said, everyone have a great day. Go hang out with Blake and the other pros in member chat, and we'll see everyone tomorrow.
Thanks,
Bye-bye.
guys.
All right,
Bye-bye.
guys. Adios. That's a wrap.